Imagine you're sitting down to buy your first home right here in the Pensacola area. You've got your eye on this place, and one of our agents is helping you write the offer. And you're asked this huge question: how much are you putting down? And you suddenly realize you're not sure what that means or how much it's supposed to be. If the word down payment makes you nervous, maybe it's because you think you need some giant pile of cash you don't have. This video is for you. By the end of this video, you know exactly what a down payment is and how much you'll actually need and how to be smart about it. Let's get into it. I'm Felix, the broker owner here at Pelican Realty Co, serving the Pensacola area from Escambia, Santa Rosa, and Okaloosa County. This is Real Estate Explained, where we take one word or a group of words that gets thrown around in every real estate deal and break it down, so nobody can use it to confuse you. Today's word is down payment. So first, what is it? A down payment is a part of the home's price that you pay up front out of your own pocket when you buy. The rest you borrow from the bank. That's your mortgage. So the down payment is your share and the loan is everything else. It's almost always talked about in terms of a percentage. Let's say you're buying a $300,000 house and you put down 20%. 20% of $300,000 is $60,000. That's your down payment. You're out of pocket. The other $240,000, that's the loan you pay back over time. Now here's the myth I want to kill right now, because it stops a lot of people from even trying. You do not need 20% down to buy a house. I don't even know where that rumor started, but it scares a lot of good buyers off. The truth is, there are loans that let you put down a whole lot less. Some conventional loans go down as low as 3%, FHA as low as 3.5%, and if you qualify, VA and USDA may let you buy the home with nothing down at all. And a quick callback for anybody who watched our earnest money video, remember that earnest money deposit? That doesn't just get added to the top of your payment. It actually goes towards it. So you're not paying both. Earnest money is just an early piece of the down payment. Okay, so why does down payment exist? And why does that 20% number keep coming up? It comes down to risk. When a lender hands you a few $100,000, they want to see that you've got some of your own money in the deal too. The more you put down, the less they're lending and the less risk they're taking. Your down payment is basically your skin in the game. And the size of it changes everything about your loan. The more money you put down, the less you borrow, which means lower monthly payment and less interest paid out over the life of the loan. Putting down less and you borrow more, and your monthly payment obviously goes up. Now, the magic 20% number. On most conventional loans, if you put down less than 20%, you'll have to pay something called PMI, private mortgage insurance, which we'll talk about in another video as well. That's an extra monthly charge. And here's the kicker. It doesn't protect you. It protects the lender in case you stop paying. Once you build up enough equity in the home though, another word, equity, we'll talk about, usually that 20% mark, you can typically get the PMI removed and your payments do drop. So 20% isn't a requirement to buy. It's just a line where you stop paying the extra insurance. A big difference. One more thing, a lot of people don't know. There are also, depending on your area, down payment assistance. There are programs, especially for first-time home buyers, that offer grants or special loans to help you cover your down payment. A lot of buyers right here in our area qualify for these and have no idea that they exist. So how does this actually land when it's your turn to buy? Your down payment is one of the biggest levers you've got, right? It shapes how much house you can afford, what's your monthly payment going to look like, and whether you're paying PMI or not, and how strong your offer looks to the seller. A bigger down payment can make you look like a safer, more serious buyer. But, and this is important, bigger is not always better. I've seen people throw every last dollar they have down on the home to hit the 20%. And then they've got nothing left for closing costs, moving, furniture, or even an emergency when the water heater dies in a month or two. Draining your entire savings to avoid PMI can actually be worse deal than you just paying the PMI for a little while. So the right down payment isn't just as much as possible, it's balance, right? Between a comfortable monthly payment, keeping enough cash in the bank, and which loan programs you qualify for. And that's exactly the kind of math our agents will sit down and walk you through alongside one of our good lenders. So you're making the smart move and not just guessing. And that's exactly why who represents you matters. At Pelican Realty Co, this is what our team does. We make sure your money's protected, your deadlines are met, and you never sign something you don't understand. We explain every single piece of your transaction this clearly because a confused buyer makes expensive mistakes, and we're not going to let that happen to you. So if you're thinking about buying or selling anywhere in the Escambia, Santa Rosa, or Okaloosa area, whether it's next month or next year, reach out and we'll connect you with one of our agents who can walk you through it. Even if you just have a question now, we're here for you. Also, drop any questions about down payments you may have in a comment. And also want to see, is there anybody in the area that has used some of these loan programs or grant programs and been able to move into a home? Don't forget to hit the subscribe button. Once again, my name is Felix, the broker owner of Pelican Realty Co here in the Pensacola area, and we will see you in the next one.